Good afternoon. I would like to thank the French Insurance Federation for giving me the opportunity to provide Bermuda's perspective and our approach to international regulation of the insurance and reinsurance sector. It is an honor to be here with you today. First, a little background on Bermuda for those of you who may not be familiar with us. Bermuda was once almost entirely dependent on tourism for foreign exchange earnings. However, since World War II, we have developed our position as a leading international business center, with the largest concentration of international companies doing business in Bermuda being involved in the insurance and reinsurance sector. We have a long and distinguished history in the insurance industry, and today Bermuda is the home of underwriting operations for more than 30 major international insurance and reinsurance firms. In 2018, Bermuda's leading property and casualty insurers and reinsurers wrote $100 billion in global gross written premium. Bermuda reinsurers make up about 36% of the global reinsurance market based on net premiums earned. Bermuda insurers and reinsurers also provide critical coverage to Europe policyholders and businesses. Bermuda companies write 20% of broker-placed European property and catastrophe reinsurance. Over the last 20 years, Bermuda-based insurers and reinsurers have paid $72.8 billion to EU policyholders and cedents. In the last 10 years alone, $56.3 billion has been paid to EU policyholders. Our carriers continue to take on increasing amounts of risk in EU member states. We provide significant coverage of major hurricanes and windstorms impacting the United States and Europe, respectively. And by way of example, I would reference Hurricane Katrina and Windstorm Xynthia. Bermuda's economic ties with France became even stronger last year when the AXA Group completed the acquisition of Bermuda Reinsurance Group XL Catlin, a leading global property and casualty commercial lines insurer and reinsurer. This acquisition has propelled AXA to the #1 global position in the property and casualty commercial lines. On the other side of the Atlantic, Bermuda is today the largest supplier of catastrophe reinsurance to U.S. insurers. The position of being a leading international insurance and reinsurance center comes together with an obligation to maintain a robust regulatory framework which meets international and regional standards. After careful consideration, Bermuda took the decision to embark on a challenging, yet successful, journey to achieve formal recognition of its regulatory regime on both sides of the Atlantic. In 2015, the EU decided that Bermuda's insurance and reinsurance regulatory framework for commercial insurers and reinsurers was fully equivalent with the Solvency II directive. Through Solvency II equivalence, Bermuda's commercial insurers and reinsurers have access to EU reinsurance markets, and their reinsurance agreements with EU cedents are treated the same as those of EU reinsurers. In addition, Bermuda's insurance regulator, the Bermuda Monetary Authority, who this year is celebrating its 50th anniversary, is recognized as a group supervisor of Bermuda insurers and reinsurance groups that operate in the EU. Achieving equivalence recognition was a lengthy and demanding process. Following adoption of the Solvency II directive in 2009, the Bermuda Monetary Authority set up a dedicated team of experts who worked for 6 years to achieve this goal. During this process, Bermuda made significant achievements to its insurance and reinsurance regulatory regime in order to align it with the risk-based Solvency II framework, while maintaining an independent, pragmatic, and appropriate regime adapted to the unique nature of the Bermuda insurance and reinsurance market. Maintaining the same outcome-based results as the Solvency II framework is an ongoing obligation to which Bermuda is fully committed. In 2018, the European Insurance and Occupational Pension Authority conducted an on-site review of the BMA to assess the implementation of the Bermuda regulatory framework. The on-site assessment's findings were positive, confirming that Bermuda remains one of only 2 jurisdictions around the world that meet the equivalent standard of the EU. Given that Bermuda is a global insurance and reinsurance hub, the journey to recognition of our insurance and reinsurance regulatory framework does not end with the EU. At the end of 2014, Bermuda was approved as a qualified jurisdiction by the U.S. National Association of Insurance Commissioners. This means that reinsurers licensed in Bermuda are eligible to be certified for reduced reinsurance collateral requirements in U.S. jurisdictions that have adopted the NAIC's Credit for Reinsurance Model Law and Regulations. Earlier this month, the NAIC published summary findings of a reevaluation of Bermuda and made an initial determination that Bermuda continues to meet the requirements as a qualified jurisdiction. We expect that the NAIC will formally reapprove Bermuda as a qualified jurisdiction in December. In addition, Bermuda has submitted its application for reciprocal jurisdiction status, a status available to those qualified jurisdictions that wish to go further and be eligible for 0 collateral requirements for reinsurers operating in the United States. This process mirrors the conditions that Europe and the US and the UK and the US have under the covered agreement. Given the positive engagement with the NAIC, along with the economic relationship we have with the US, we anticipate a positive outcome and that Bermuda will receive the reciprocal jurisdiction designation also in December. The compliance obligations of a successful global insurance and reinsurance center are not limited to insurance and reinsurance regulatory standards. Bermuda remains fully committed to maintaining its status as a cooperative jurisdiction and a global leader in international tax transparency. Bermuda is a member of the Caribbean Financial Action Task Force and is currently undergoing an assessment of the island's anti-money laundering and counter-terrorist financing regime. In November, we will be participating in the next CFATF plenary to be held in Antigua, and we expect a positive result from this assessment as well. Bermuda has adopted OECD standards for compliance with base erosion and profit sharing and has been assessed as largely compliant with the OECD's International Standard of Transparency and Exchange of Information on Request protocols. Bermuda has also implemented the international standard for the automatic exchange of financial account information under the Common Reporting Standard, as well as BEPS country-by-country reporting requirements. Earlier this year, Bermuda's new economic substance regime was successfully assessed as meeting the economic substance standards for no or only nominal tax jurisdictions as set by the EU and the OECD. It is my hope that it is clear now to you that Bermuda is committed to global tax transparency, global regulatory compliance. With the next panel in mind, let me conclude by saying that modeling our insurance and reinsurance framework to achieve the same outcome-based results as Solvency II was the right decision for Bermuda. Our island would be well prepared and well positioned if Solvency II were to become the standard for the world. At the same time, as a global insurance and reinsurance hub, Bermuda supports the development of international insurance and reinsurance standards and will continue to work closely with the standard-setting bodies. Merci pour votre attention et bonne conférence.